Hello, this is Craig Webb with Webb Analytics, providing you with another quick update on what's happening in construction supply and the construction supply economy. This is sponsored by ECI, and I want to thank them for making this possible. The fact that I'm showing a turtle slowly climbing a set of stairs may give you an indication of some of the feelings that I'm having about the economy right now and how it affects you. In essence, we're seeing some anecdotal reports of slowdowns in certain parts of the country. Now, that may not necessarily mean that life is really being troubled, but because the economy is in fairly good shape. But it could indicate that life for you is going to be pretty slow but solid, depending on how hard you're going to be working this summer. The Builders Daily, which is one of the better reports in the country talking about the housing economy, says that it's been seeing troubling signs among big new home builders, and that the sales season that we usually see in the spring has not been quite as good as they were hoping it would be. Now, on the existing home side, there also has been talk that things aren't quite what they were. Pending home sales, for example, has been talked about as an example. Homes are taking longer to sell. We're also hearing some reports that there are some price cuts going on. But at the same time, almost 100% of the homes are selling at their final list price, and the median sales price is still rising. So when Evercore ISI was looking at some of these factors, they said, well, it very well could be that at least on the existing home side, we're just seeing people who are selling coming back to reality in terms of what the prices are, but still getting pretty good prices and more than they were in the past. Evercore also went recently to Tampa Bay and was finding some interesting back and forth numbers regarding to the state of the economy. People were saying demand has softened. Yes, there is slight slowdown in foot traffic, but on the high end and the active adult community, sales are still going fairly well. Yes, they are trying to do more incentives like rate buy downs, but at the same time, builders are hitting their sales targets. So you get this back and forth on what's happening. And the moral of the story, I think, is that there are lots of variations between and within the markets. So whatever happens in your market does not necessarily mean that it's going to be the same as what the national headlines are. I mean, just look at how home prices have changed since 2020. In the United States, the prices have gone up 48%. If you're in Florida, you're 20 points higher. If you're in the District of Columbia, you're 30 points lower. So it really is going to vary. Now, nationally, the lines do seem to be smoothing and going slightly up. Homes under construction are lower than we've had compared with, let's say, a year ago, but they're still better than we were at the start of this decade. I am a little concerned about what's happening in the custom home building market because that's shrunk a little bit. And I know that so many of you dealers depend on custom homes. So we'll have to see, exactly what's going on there and see whether that's going to be a blip or a longer term trend. On the multifamily side, we do know that the numbers are heading lower, but it is taking so long to build these multifamily projects that you as dealers are probably still getting orders for products because how construction underway is still pretty high. And it's still a challenge to get those projects done because we're about 750,000 people short on the workforce compared with where we were 15 years ago. That's according to Harvard. On the remodeling side, as you'll recall, the Joint Center for Housing Studies leading indicator had forecast a decline early this year and then a revival as we get toward the latter part of this year. One reason why may be that the pandemic era payments are pretty much all out of the economy now. People don't have that money in their bank account anymore. And so the people who had been depending on it to get ahead to buy things or whatever don't have that cash anymore. And you're starting to see this bifurcation in the economy show up in a number of different statistics. One of them has just come out from the New York Federal Reserve. Every month, the New York Fed asks people, What are your income and payment expectations in the year to come? Well, in January of 2023, 3% said they'd be much better off. 5% said they'd be much worse off. You get to May of 2024 and you ask people, how do you think you're going to do a year from now? 5% now believe that they're going to be much better off. But we've also seen an increase by 1 percentage point in the percentage of people who thought they were going to be much worse off. So there's this break that's happening in the upper and lower quintiles of the economy. The lower quintiles do play a huge role in whether home improvement companies get foot traffic, other companies get foot traffic, and a company called Placer AI is saying that things are slowing down. Home Depot, Lowe's getting less traffic than they were a year ago. Harbor Freight and Tractor Supply are growing, Placer believes, in part because they've simply got more stores. So their numbers are going up. Now, all of this is happening inside an overall economy that actually is still fairly good. We had relatively slow growth in the first quarter compared with the fourth quarter, and that was 1.3% growth. But if you look at the Atlanta Fed's GDP now, which takes numbers as they come in and says, here's what the GDP is likely to be by the time we get done, it's pointing more toward about a 3% growth. Even the blue chip consensus is over 2. So we're still looking pretty good. And a lot of companies that are dealing with Christmas sales and planning ahead are shipping more stuff in at the highest levels that we've seen since 2022. So they've got relative optimism with regard to where the economy is going. The jobs report has provided mixed signals and is likely to keep the Federal Reserve from deciding anything, in part because the numbers keep bouncing back and forth. In fact, there are 2 different surveys that go into the jobs report. One said hiring increased and one said hiring decreased. So you have those challenges. The Fed is likely to be happy and to see that rents are not quite rising at the pace that they were 2 years ago, 3 years ago. And that is going to help because the tenant costs, the living costs, are a big part of the overall gross domestic product. Architects also are not necessarily doing spectacularly, and that would indicate a slower economy, even if we're at 3%. That said, the latest forecasts now are that we might have a rate cut in September and then maybe one more later this year. Other central banks already are reducing their rates, and a person as influential as Mark Zandi, the chief economist at Moody's, was telling the Fed in an op-ed that it's okay to cut your rates now, because in part because some of the numbers you're using are unrepresentative of the true state of the economy. So where do we stand? Well, in past reports, I've talked about being on a surfboard, or in my construction supply 150, I talked about life as on a roller coaster in the last few years. I think today life for building material dealers is like being on a paddleboard. You will move forward slowly, but you got to do it by paddling. And the only way to get faster is to paddle harder. And I think that's pretty much where we are right now. I want to finish with a quick look at a trend that I'm seeing around the country that I think is interesting, and it's the delivery services that companies are providing. McCoy's, once again, is McCoy's Building Supply in Texas is once again testing free delivery to their customers. They want to make sure that they've got a decent number of DIYers who are taking advantage of their services. So they're offering free delivery. Lowe's is using DoorDash to help provide delivery of products, sometimes with a $0 delivery fee. Home Depot is working with Instacart. So we're starting to see these things happen all over the United States. And I think it's something that dealers need to be thinking about. You've got buy online, pick up in store, you've got some other things, but this may also be worth looking at. So that is my report for this month. I hope this does help you. And once again, I would like to thank ECI for helping make this possible. That's the story. Thank you very much for taking part. Bye-bye.